Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, April 29th. We're going to probably talk quite a bit about things from a producer's perspective here, but first let's talk about tonight's outlook for the trade. I think you're dealing with a situation where weather forecasts and conditions, it's extremely difficult to find anything that would be considered bullish in weather, even whether you're looking at U.S. or globally. We've had good rains over the weekend. The next several days is going to see a warming trend. There will be rains over most areas during the next couple of weeks, but not heavy rains, and probably planting opportunities will still present themselves. For the crops that are planted, you couldn't ask for a better start. For the crops that have not yet been planted, it's only the 29th day of April, and if we get some moisture, I think that's the benefit of that is will offset anything related to the calendar, which certainly isn't late. I think we may also find in Monday afternoon's planting progress report that the corn crop is much further along in planting progress than what the trade thinks, which I think the trade probably anticipates we're something less than 50%, maybe 45% planted, something like that. I think we're probably quite a bit farther than that. So I'd say weather is bearish. It's not bullish, and I think the same could be true even if you look at it from a global perspective. As far as outside markets, I don't see anything that offers a great influence there to us tonight. Wheat's going to find mixed expectations. Some will be encouraged by Friday's strong performance, and there's a constant fear that every rally is going to evolve into some major short covering phase. These are not unreasonable concerns, but we've proven in the recent past that this market is capable of pushing lower despite a large speculative short position, and we've proven that every time we attempt to stage a rally, it does not transform into some major short covering event. That said, that's going to be a constant fear that people have about trying to be short wheat or trading wheat from the short side. They're going to be afraid that at any time you're going to get a major short covering event. Fundamental factors, I don't see anything on the horizon, either existing now or on the horizons, that will cause a major shift or a major short covering phase, but it remains a fear. If the corn market, specifically old crop corn, stalls out this week, doesn't get much follow through to Friday's upside performance, I think you're going to see a more willingness and more aggressiveness to sell wheat as the week evolves here. The overall outlook for wheat continues to suggest it's very warranted to think that prices can be soft going into the northern hemisphere wheat harvest season. Crop ratings, some might expect a slight decline in Monday afternoon's crop rating, but overall these are still very good ratings, and I don't think anybody's super concerned about overall production prospects in the U.S. If all these things are true and we continue to have good favorable conditions into harvest, you're probably dealing with a situation that downside potential here in wheat can easily be $1 from current levels. So it's not something to be forgotten about if you're a producer. It's not something to be forgotten about if you're a corn trader and trying to gauge how long wheat's going to be an anchor to corn. So I think you've still got a situation, U.S., globally, fundamentals, everything suggesting that we may have a heavy outlook and a weak tone going into harvest period. As far as the opening calls here for tonight in wheat, I think you say it's going to be mixed, because some are going to expect follow-through from Friday, and some are going to expect a focus on crop conditions to decline Monday afternoon. I don't think those are the predominant factors, most important factors, but I think it will lead to a mixed opening outlook. Any small additional strength from Friday's levels, I think we'll begin to find tech selling, so I don't think you're looking at much for upside potential here this week, but you may see some mixed activity early. As far as corn is concerned, traders have had a default bullish setting on corn for months, and they're anxious to join anything that looks bullish. So Friday's strong upside performance on old crop corn, has got traders extremely excited and expecting that there's going to be much more upside potential and things of this nature. I think that's a very dangerous comment. Number one, it ignores the fact that 24 hours before we closed on Friday, July corn futures were less than a dime away from the lowest price they'd been in 13 months. And you can say, yeah, but they didn't know about the corn announcement at the time from that China had bought all this corn. Number one, this business that China purchased, most of this is new crop. And even some of the stuff that is slated as old crop business, there's a good chance that by the time it's actually shipped, it becomes new crop sales. Secondly, these Chinese rumors that have been around for weeks, if not months. They've been around very strongly and very matter-of-factly and known for several days. So that part of the Friday's announcement is certainly a known factor. But people have been talking about high Chinese domestic corn prices and the likelihood of expanding corn imports and things. They've been talking about that for weeks and months. But yet I think it's still important to go back to the point that on Thursday you were less than a dime away from the lowest you've been in basically 13 months. So yes, you can look at Friday's performance and say, aha, that's a great thing, we're off to the races. Or you can say, yeah, wait a minute, maybe that's the last reaction of and probably one of the last major announcements you're going to have from USDA in terms of corn sales, and maybe that was the culmination event, not the beginning event. I think that overall it's a better chance it's closer to a culmination event than anything else. I think there's still, the key here is corn prices have underperformed popular expectations for months, and it's demonstrated it no more concisely than to point to the fact that Thursday you were less than 10 cents away from the lowest you've been in 13 months. And as far as new crop corn is concerned, it didn't participate much on Friday. Old crop was up, 20 cents nearly. New crop corn finished up approximately 4 cents in D's. Struggled at that, and it's been sideways most of the month. So I think you've got new crop that's still being impacted mostly by favorable weather, large acreage expectations, and crops off to a good start, and no visible threat on the horizon in terms of weather forecasts. And if it is true that the market has been somewhat supported by anticipation of this Chinese business, and if it's true that this ends up being some of the last of the big sales announcements, you have to wonder, are we still dealing with a situation where the corn market is going to take a nosedive here? And I make that comment based on the favorable new crop beginning, and I base that comment on the idea that producers have probably the smallest percentage of forward crop and new crop price protection that they've had on for years. And I think that at the same time, the speculative community has been carrying long positions for a long time in corn, and the trader sentiment has been nothing but bullish. Yet, if you look at where we're at, D's corn right now is in the bottom 20% of the price range for the last 5 or 6 months. It's in the bottom 10% of price parameters you've had since September. And what the producer has to be concerned about here isn't the fact that he hasn't made the sales to date, and you run this risk of getting this false perception like, well, why would I want to sell it now? And you've just told me it prices in the bottom 10% in the last several months, bottom 20% in the last 5 months. Why would I make a sale here? Well, the risk here is that today's values, while right now they're in the bottom 10% of prices since September, there's a risk that they become in the top 30%. And you say, how can that happen? Well, if December futures sometime between now and harvest ends up being at $4, which, don't laugh, is not an unreasonable statement by any means. You could go back in the last several years and find plenty of examples with a similar fundamental outlook that caused new crop prices to trade well below what they were in the summer. So a $4 trade in D's corn is not an unreasonable possibility. If that happens, all of a sudden today's prices are not in the bottom 10 or 20% of the range. They're in the top 30%. And I think that's the risk. Or if you want to say it a different way, from here forward, maybe today's prices are in the top 10% of what prices we're going to have between now and December. That's not an unreasonable statement. And I think that's the risk that the producer has to face. These prices are not easy to make sales because they're lower than you've seen over the last few years. They're not easy to make sales because you know that at the bottom side of parameters over the last several months. But yet, when you look at what prices could be, there's still a risk. I put it to you this way. If I come home and walk in the kitchen and I find that there are chocolate chips, sugar, brown sugar, eggs, and butter and flour on the kitchen countertop, I have to think, hey, there's a chance my wife's making chocolate chip cookies. Now maybe she just got home from the grocery store and she hasn't finished putting away all these supplies, and she doesn't make cookies today. Maybe it's a false alarm, but at the present time, all you can see is the ingredients are on the counter to have cookies. And if you want to put it in terms of crops, you've got an early start, you've got a favorable start, you're going to have fast emergence, you've got warm temperatures coming, you've got plenty of moisture, there's not a moisture situation anywhere, you're going to have extremely large acreage, and you've got a situation where trendline yields could give us a very, very abundant production by fall and completely change the whole fundamental foundation of the corn market. Now, maybe it'll never rain again, and maybe we're going to have the biggest drought ever in 2012. But at the present time, those ingredients are not visible in the kitchen. But the other ingredients are, and I think we need to respect what they could end up producing. As far as soybeans are concerned, you had some large deliveries against the May contract that were not expected, and I think that probably put some initial pressure under the nearby months. The nearby months have been very strong in kind of a squeeze effort in a short cleansing environment that's been very thorough over this last several days. You would have to think that's getting close to being complete and being done. New crop prices have not fully participated in recent gains. In fact, if you look at where November beans settled on Friday, they settled 35 cents below the price peak made at the early in the month. Since the first of the month, you can argue about exactly what the figure is, but I don't think there should be any argument that U.S. New crop soybean acreage is going up. We're going to have more acres than what they thought at the end of March. Exactly how much, who knows, but we're definitely going up. The weather is not a concern. Planting progress in beans will only be somewhat slow based on the calendar. They're not being based on any inability to plant. People are just waiting to get the corn done, etc. You've got a situation here where new crop beans at $13.50 plus or minus, been up to approximately $14 early in the month. These are price levels that are very profitable, and I think that the producer needs to look at those from a profit opportunity perspective, not what might still be left on the table. Yeah, and if you have any doubt about that, I think all you got to do is go back and look at what corn prices have done. You know, people have not made sales because they're so afraid that they might miss out on an even higher price, and maybe that higher price is still coming. But at the present time, we've seen prices erode, and they've eroded at a time frame where the popular opinion was to think that corn prices just can't go down and they absolutely must go up. So I think there's a lot of reasons that producers need to make sure they're protecting these soybean profit opportunities that exist and not getting caught in the trap of avoiding to make those sales, especially if people are slow and have fewer new crop corn price protection strategies in place or forward sales on than they normally would at this time. So as in terms of tonight, beans certainly could trade on both sides, but the technical conditions warn of a downside flush coming, and the exhaustive price action of the last few days in old crop beans, and I really question to understand why we are going to be able to maintain these levels. If it was to try to encourage soybean acres, pretty soon that decision is complete and over and done with. So look for maybe some mixed attitudes here tonight. Expect limited strength this week above Friday's highs, and expect selling pressures to increase as the week unfolds. For the DPP Grain Desk, this has been Duane Lowry. Thank you.